Welcome to Markets Today. I'm your host, Mbitha Mwema. It's the first trading day after the long weekend, and today is the 26th of May, the year 2020. Now, we expected it to be a slow start, but there has been a lot of corporate news that has come through the pipeline overnight as that is affecting the stocks on the Nairobi Securities Exchange. I will be giving you an overview of what these news highlights are and what we expect to happen on the trading day, as well as giving you insights on who our guest in studio will be and what we will be discussing. But first, let's have a look at the Nairobi Securities Exchange. The big news of the day is coming through from Equity Bank Group. Equity Bank Group has actually cancelled its dividend for the full year ended 2019. The bank was expected to pay 2.5 shillings per share for that particular period, which would have culminated to a total value of 9.4 billion being paid out to the investors for the year 2019. The bank has actually come out and said that its board decided to cancel this dividend in light of what is happening in as far as COVID-19 is concerned. I think this is a fantastic move, or rather a good move coming from the management, and it actually signals to the market that they are seeking to be very prudent to conserve cash in anticipation of a worsening economy as well as higher expected non-performing loans. We also take this as a read-through from what is happening to global banks. We have seen banks in China through to US and to Europe actually cancelling their dividend payout checks for the year 2019. The other trend that we have seen on a global perspective is the fact that non-performing loans are on the rise. For China alone, in the month of in the month of April, there was a 300% jump in non-performing loans. All of this was directly linked to the COVID-19 pandemic in that country. If you take this as a read-through of what to expect in Kenya, of course we do not expect such an adverse outcome, largely because we've been shielded in one way or the other from the pandemic of COVID-19, owing to the government's first move in terms of curtailing movement and containing the spread of COVID-19. That said, the closure and the curfew as well as the restriction of movement has impacted certain sectors that have access to credit from the banks. This is the transport sector, the hospitality sector, as well as the real estate sector. We will expect higher non-performing loans from these sectors, which will be adverse for the bank earnings. And in light of this, it will be prudent for the managers to hold on to cash and not pay out the dividends that they had earlier indicated to the market as a means of being prudent. But that said, the investors have been buying some of these stocks, especially Equity Bank, and looking to the dividend yield as a point of giving them a mitigation in terms of preserving their returns on this stock. The dividend yield was expected to outweigh the fact that the company would actually see lower performance on the NSE as the investors turned bearish. Without the support of this dividend yield, we expect to see a price decline. As we speak, we have already seen the price come to a low of 33 shillings per share, having closed at 36.15 shillings per share last week on Friday. We expect this to be the continued trend today and tomorrow as the market prices in this new immaterial information of having a zero dividend paid out for this bank. I also expect this to be the trend in the year 2020 with a possible recovery in the year 2021. We will keep you posted on how the market reacts and as far as this news is concerned. Again, on the corporate filings, Standard Chartered has also come out earlier today and indicated a possible extension to the delay of the dividend they were to pay out for the year 2019. Standard Chartered Bank had proposed a final dividend of 15 shillings per share. COVID-19 has made it impossible for AGMs to happen because of the containment and the social distancing measures that have been instigated by the government. Standard Chartered has indicated that this has caused a delay in getting approvals from the shareholders as well as from the board in as far as paying out this dividend is concerned. It does sound and come across as though this is a delayed tactic, and it could be possible that Standard Chartered will either take the route of Equity Bank and probably not pay out any dividend for the full year 2019, which is the final proposed of 15 shillings, or possibly take the route that NCBA took of issuing a bonus share. We do not know what is going to happen, but from the delay tactics, it's highly likely that there won't be an actual cash dividend that's paid out. Possibly an additional share could be issued, or there could just be a full cancellation of the dividends that had been awarded for the final year in terms of 15 shillings per share. A lot going on again on the shares in terms of the banks and what they're paying. And we've also seen a similar mandate coming out from Stanbic Bank because they're yet to have their AGM, so they are yet to approve. I think the story that we are getting here and the trend that we are getting here and the read-through that we're also getting from this bank announcements is the fact that liquidity is going to be a problem, the economy is going to worsen, there will be need for banks to be able to hold on to cash, and it's prudent for them to hold on to cash and pay dividends to shareholders in the longer term as opposed to in the short term. This will affect the investment thesis for some of these banks, and we expect to see lower price points printed on the Nairobi Securities Exchange. It's all about banks today because they've also been reporting the first quarter numbers. We've seen Cooperative Bank, Kenya Commercial Bank, DTB Bank, as well as Stanbic announce their first quarter numbers. What do these numbers look like? What has the trend been like? And what do we expect for the second quarter? And for you as an investor, should you be buying these stocks today? Should you not be buying these stocks today? Where should you be putting your money in? I keep saying cash is king because there'll be a lot of material information that keeps to come through on these companies that are listed on the Securities Exchange. I continue to expect downward price movements, and I would not be a buyer of these stocks today. But let us hear what some of the people in the industry have to say. We take a short break. When we come back, we will be joined by Mr. Willis Nalwenga. He is a senior research associate at Kingdom Securities. He'll be taking us through their house views on the banks, what the read-through was for the numbers that have come through and what he expects, and he'll also be giving us some stock picks and some price levels to be able to trade at. Don't go anywhere. Do join us after that. But before then, I want you to take your phone, take out your SMS line, reach out to us on 20146. Tell us where you're watching from, what you would like to know on banks. And if that doesn't work for you, you can also reach us out on our social media handles. That's Metropole TV on Facebook, Twitter, and Instagram, or Mbitha Mwema on Facebook, Instagram, or Twitter. Tell us where you're watching from, what you would like to know about the banks, and how we can be able to give you insights and information to make your investment decisions worthwhile. See you after the break.